So this is a cash flow statement question for Carey PLC. So for this part here, we're just going to look at fixed assets. We're looking at basically calculating the cost for the land and buildings, machinery, then calculating the depreciation for the year for both fixed assets. And we're told at the bottom of the question here that there's disposals for both of them, so we have to calculate whether they made a profit or loss. So the information here at the bottom: buildings costing 50,000 were sold for 55 this year, and machinery costing 110,000. Book value of 65,000 was sold during the year for 35,000. We'll dwell into that later on. So the first thing we're going to look at here is we're going to look at the buildings. So first part here for buildings, balance at the start of the year we see comes from the end of last year is 650,000. The next line here I'm going to look at is my disposal for the year. So they give me this information, they tell me that buildings costing 50,000 were disposed of. So you take it out of cost, so our net book value there is going to be 600,000. Not our net book value, that's our cost value, taking out the disposal. Now we're not told anything else, but we know that the balance at the end of the year is 750,000. So it went from 650 to 750, and we disposed of some buildings. So if we dispose of buildings, our balance is down to 600 and suddenly went up to 750. So that 150,000 difference is a purchase. So it's a missing figure, and it's 150,000. It's the difference between the 600,000 and the 750,000. So that 150 is a missing figure we have there for buildings. We're going to do the exact same thing here for machinery. So our machinery note here, the first thing we're looking at is the balance to the first, 430,000. If you see down at the bottom of the question, we have machinery costing 110,000 was sold. So I'm going to take out that 110,000 because it's no longer there. I take it out of cost. So that drops it down to 220,000 is now, sorry, that should be 320,000. 320,000 is now my book value for machinery. That's how much machinery I have if I keep my machinery, but it goes up to 370,000. So the difference, it was 430. It's after dropping to 370, but I only sold machinery of 110. So it's gone up another 50. That 50 that we've gone up is a purchase. The difference between the end of the year and what we had here after our disposal is a missing figure, and it's a purchase, the exact same as the buildings. We're just looking for that missing figure in the question. Next thing we're going to look at, so we have the cost done for both fixed assets. Now we're going to look at the depreciation. So similarly here, we're given the balance at the start of the year, and in this one I'm going to put up as well the balance for the end of the year, because we're given both those information for, first of all, buildings we're looking at. So 110,000 is our balance the first of the first, and 120,000 is the balance at the 31st of the 12th, the end of 2010. So it went from 110 to 120. Now my depreciation is going to go up because I'm going to have depreciation for the year, but we know it went down as well because I have a disposal. I disposed of some buildings, and because I disposed of some buildings, that depreciation has to go. So what did I dispose of? Buildings cost 50,000 were sold during the year for 55,000. So buildings costing 50,000 were sold for 55. They haven't told me how much they were worth. They haven't told me how much depreciation is on it. Essentially, I don't know anything. So this disposal figure I'm going to have here is actually an unknown figure. I don't know how much it is. So right now I can't calculate it. My disposal figure, it's a missing figure. My depreciation for the year at the moment, I can't calculate that because all they've told me on depreciation for the year is depreciation on tangible fixed assets, which is going to be buildings and machinery, charged for the year and arriving at operating profit was 100,000. So I had, where did I put this here? I think it's this one. I had depreciation on tangible fixed assets, so that's buildings and machinery, of 100,000. I can't finish buildings because I don't know the depreciation for the year, because it's 100,000 between both accounts, and I don't know the disposal. So I have to move on. And I'm going to move on now to my machinery. So my machinery, the balance at the start of the year is 150,000. Balance at the end of the year is 180,000. I'm just taking those figures from what I have in the question on machinery. Same as I do with buildings. Now, my depreciation for the year here for machinery, I'm not going to know it right now because I'm just told depreciation for the year for both fixed assets is 100,000. But I do know a little bit more about my disposal, because if you look at the question, it says machinery costing 110,000 with a book value of 65,000. So the machinery was 110,000 a cost, and we sold it, or it was worth then 65,000. So we know that cost minus depreciation is net book value. So this is my cost, and I know my net book value is 65,000. Therefore, if it cost 110 and went down to 65, there was depreciation of 45,000. So this is my depreciation for machinery account, and I'm trying to take out the disposal out of the depreciation account. So I know that the disposal on this fixed asset which I sold was 45,000 because it went down from 110 to 65. So if I take out the 45,000 here, that is my disposal amount gone out of the account. The only two figures we have to try to find are depreciation for the year and disposal. Now I found disposal, so I can work my way back. I can work this back here to be 100, I just blackened out, 135,000, because I know, that's 45 plus 225,000. So 225 minus 45 is 180. And I know to get from 150,000 to 225,000, I had to have depreciation for the year, and that has to be 75,000. Once again, so 75,000. So we didn't know the depreciation for the year, and we kind of didn't know the disposal. We knew the two balances at the start. I could work out the disposal to be 45,000. I simply worked my way back, get 225 here, and I know it went from 150 to 225. I know the depreciation for the year had to be 75,000. Now, I'm told the depreciation for both tangible fixed assets amounts to 100,000. I now know that machinery was 75,000. Therefore, 100,000 minus 75,000 from the machinery account, we found the depreciation for the year for machinery was 75,000. That means the buildings depreciation for the year is going to be 25,000. So that's 25,000 there for depreciation for the year for buildings. That means I went from 110,000 and I added on another 25,000, so that's 135,000. Now I can work this out. It was 135,000, went down to 120,000 at the end of the year because I had to take out a disposal amount, and that disposal amount was 15,000. I'm just filling in the blanks. This is my missing figure here as well. And essentially it was just because I had two accounts. I knew that the total depreciation was 100,000. Once I figured this one out, I knew what this one was going to be, and then you're just doing maths basically to find the last one. Therefore 100,000 minus, that should be 100,000 minus 75,000 for machinery gives me 25,000 for buildings, which I worked in and then worked the rest of it out. So that's my depreciation done. The last thing we have to look at for this here is going to be the disposal. So my disposal account for buildings cost 50,000. Buildings costing 50,000 were sold. That's my cost. The depreciation we worked out here to be 15. What I'm trying to do for my disposal account is I'm trying to see did I make a profit or loss. So I need to find the net book value of the buildings and then find out how much I sold them for and find the difference, and that will determine whether I have a profit or loss. So I know they were worth 50,000, there was depreciation of 15,000 on them. That means they had a net book value of 35,000. Net book value 35,000. I'm not told whether I made a profit or loss, but I am told that we sold them for 55. So if something's worth 35,000 and you sell it for 55, it means you made a profit on disposal of 20,000. So it's my missing figure, so I'm going to type that in here. So profit on disposal of 20 grand. I can do the exact same thing here now for my next disposal account. Disposal machinery cost 110,000. Machinery costing 110,000 was sold for 35. So I know later on here my last figure proceeds is 35,000. I don't have to worry about that now, but I know that my cost minus my depreciation is my net book value to see how much it was worth. The 45,000 we calculated because they basically told us all this information. They told us the net book value was 65,000. We worked the depreciation out. So this is something we've already kind of calculated ourselves. It was worth 65,000. We sold it for 35. So that 30,000 difference is going to be a loss on disposal. It's a missing figure. Loss on disposal of 30,000. And that's the end of that. So this question was a little bit different. They kind of gave you a small bit of information. You were able to find out the net book value here of the machinery, and you were told that the depreciation was 100,000. You're told very little actually. This is easy. You can work this out just by the cost at the start of the year, cost at the end of the year, and you're always told how much you sold the two fixed assets for, so you always worked out your missing figure here. But the depreciation took a little bit of work, so for this kind of question you have to do both of them at the same time and work with the information you have. We found out this guy here, so then we could plug in the rest of the figures and find this 75,000. We knew the depreciation for the year for both of them added up to 100. So if it was 75,000 for machinery, it was 25,000 for buildings. Once we had that, we could work out the disposal here for buildings, and after that it was just a case of finding the net book value for both fixed assets and the proceeds and seeing did we make a profit or a loss.